Hello, everyone. Hello, everyone, and welcome to the Smart Investor. Why smart? Because you're going to be here to be educated as to what's really going on in the stock market. And what is going on is very interesting right now. Why am I saying that? I know that everyone right now is worried about the Fed. I know everyone right now is worried about, we're going to have a recession. Is there a recession on its way? Is there too much inflation? Not enough inflation. Take it easy. Take it easy. What you need to understand is that we trade on information. We trade on information. We do not trade on reality because we do not know what is going on the ground. And that's the reason why you need to be educated as to what to look for, who to get the information from, and what to do with it. So, with no further ado, do we have, is it possible that there's a market crash coming up? Is it possible that this whole house of cards is going to come down on us anytime soon? Hold that thought for 1 second. Okay. First of all, we need to understand the environment that we're in. The environment that we're in right now is a low rate environment. Rates are coming down, maybe not as fast as some people would like it to be, but rates are coming down. The second thing that is happening is that we have an election that creates uncertainties. Also, the market wants more rate cuts, and whenever it doesn't get it, you will see that it's not going to push stocks as high as they should be. Also, and of importance, you need to also look what's behind us. What is lurking behind us? And it's nothing to do with the whether or not they're going to lower the rates, whether or not they're not going to lower it fast enough, right? Whether or not we're in a recession, we're not in a recession. These are trivial matters as far as I'm concerned. These are great topics. Don't get me wrong. I love them because it creates that uncertainty in the market, right? So that they say, oh, we're not going to get the rates. Oh, we got the rates. Oh, maybe we need more rates. Oh, we didn't get it. You know what I mean? So, and it's good because it creates some uncertainties. You want the uncertainties because if you're trading in options, you trade in volatility. And if you trade in volatility, you couldn't make money in a market like that. Now, having said all this, and again, join my channel if you want to know more about the stock market. Join my Patreon channel if you want to know the type of trades that I'm putting on, right? And if I'm looking at my trades right now, my little trade book, as to how well we're doing, this is how we are doing right now as far as the trading is concerned, which is not too bad. We're not averaging a huge amount of money, but we're here to have, we have some fun and make some money. Not we're not here to break the bank or anything like that. So if I take a look at where we are, well, I don't know, where are we? I can't find my trades here. What's going on? Oh, it's not here anymore. Well, that's a problem. Anyway, I'll show it to you later on. But the point is, join my Patreon channel as you could see all my trades. Okay. Doing well. I don't know, averaging $250, $500 a day in September. Doing the same thing in October. A little bit more difficult in October because I kind of went a little too soon and got taken out by the Tesla situation. But anyway, we're here to talk about market collapse. And let's talk about it, right? Because the thing that we're seeing behind is what are the bigger issues that we may not be focusing on, right? And for that, there's no better else to talk about what we do not see, which is basically the black swan, right? That's the event that's going to take us out. Well, we were still wondering what's going on, what happened, right? Black Swan. And the guy that wrote the book is Taleb Nassim, and he doesn't often come and talk about because, frankly, he has nothing to sell. he's not selling his stocks. He's not. Sometimes he has a book to sell. But he hasn't written anything in a while, so he has not. So him, I will listen to him. I will pay attention as to what he's talking about, because his view, if you read his books, are all about not so much trying to predict the stock market. That's not what it's about. For him and for me, it's about protecting what you have and not trying to predict anything, and try to understand as to what is going on. So let's pay attention to him. He was recently invited on Bloomberg, and I think it behooves us. It behooves us to listen to what he has to say, because it is quite interesting in terms of, what is it that we're not seeing? What is it that could hit us, and that we should be paying attention to, right? So let's go right now to see our friend Taleb Nassim, to talk about and listen to what he has to say, which is always, I have to say, always quite interesting. So here's our friend right here.
We spoke to your colleague, Mark Spitznagel, who is over at Universa. He had been bullish on the market, but has been voicing more concerns.
Yes.
How do you feel about where we stand right now?
So let me qualify by saying that Universa is market blind. Formally market blind, but we're humans. We have a idea that Mark's sentiment was that you need a big tail hedge and you need a big position. It compensates you because the market rally,
So what he talks about when he's talking about a big tail hedge, what is he talking about? Well, he's a big proponent, and frankly, him and his friend over at Spitznagel, over at Universal, made a buttload of money. I'm talking 4,000%, 4,000% during COVID time, because he took a long and dated hedge, right? So basically, they believe in hedging, in the future. What I mean by that, basically, what they're doing is they're buying puts in the stock market, like buying puts on SPY. You could do that, and I've done a few times. I haven't done that well with the SPY, quite frankly. Done better with the puts on stocks, or call really on stocks, because the SPY is, and I took long dated puts, and it's a tough thing to say, because for example, the last time around, the SPY was up 0.6%. Well, if you're buying a June 9, 2025 put option, I mean, the thing's got to move a lot, right? If you look at the implied volatility, the option has to move a lot for you to make any profit, right? And frankly, I mean, yeah, you hear the Dow going up 400 points, but in terms of percentages, he hasn't done well. So, but what he's referring to, he's talking about massive amount of puts, long dated puts in the future, right? So that, but he's not looking for like 0.5% drop. He's talking like 20-30% drop in the stock market, which is exactly what happened at COVID. And he made a boatload of money. Like I said, he made almost 4,000%. That is what it is that he's referring to when he's talking about that. So let's see what else he's saying, which
allows you to have a larger position. If a tail hedge allows you to have a larger position. So that was his position. But now we have a lot of risks building up. Okay, whether the first one, I think, is, of course, we're starting to pay, and year after year taking a larger portion of the budget.
Now, I did say that to you, right? I did say, be careful, Be careful once they start talking about the debt. That is going to be a whole different ball game, because you cannot hedge yourself against that.
So it's not out of control yet. Europe is worse than us. When you have debt, you need to grow very fast. We're growing, but we should grow faster to be.
Here, what he's referring to is the fact that we're not in big trouble right now. Why we're not in big trouble? Because we still find investors willing to buy the treasury to refinance our debt, which is about 35 trillion. So we still have these people willing to refinance us. Second, if we look at most of the national debt is tied to entitlements, right? For example, Social Security. Now, Social Security is funded at least until the next 9 to 10 years. So technically, you don't have to worry about it right now. Although by that time, if you haven't fixed this issue, it's not 35 trillion we're going to have. We're going to probably like $50 trillion. Then you're in real trouble. So there's not immediate concern, unless if the market wants to make it immediate, then it's going to be immediate. But right now, although I'm hearing more and more talk, but right now it's not an immediate. Plus, one way out of this situation with the national debt is basically you need to grow, right? If you're able to grow the economy fast enough, guess what happens? You grow the economy, you make more money, and you pay more taxes. Therefore, you lower and this is kind of the Trump situation, right? I'm going to cut taxes, which is obviously not good, because that's going to make less money coming in to pay for the national debt, and therefore we're going to go further behind. But he's saying, no, but by doing that, I am going to increase the rate of increase in the GDP. So the economy is going to grow faster. So therefore, it'll fix itself. That's a tough one to swallow. But anyway, that's always a possibility. So that's what we're dealing here with the national debt. Let's see what else he's talking about. He's always saying,
be able to control that debt. That's a big thing. The second one is, and I'm really worried, if someone asks me what are the top 2 biggest financial mistake made in the 21st century, one of them would be confiscation of assets by, after the Ukraine war, of people, because this kind of thing you can do once. So the United States bullied Europe to participate in confiscation of assets of all, some of relevant people, with vague links to the Russian regime. And it may make sense maybe from a justice standpoint, but you got to remember that it's not going to encourage people to invest in the system, okay? So transactions are still conducted in US dollars, but we're seeing.
Well, yeah, that's a tough one, right? That's a tough one, because he's basically saying that, you guys took money from people, and for no good reason, or no reason that's warranted, or if they were warranted, be careful, because now you're making everybody nervous that people, whenever they invested, you could take their money away from them. That is a tough one. Don't forget, subscribe to my channel, like what you hear, so you hear more of it. That is a problem. In addition to that, and he's going to refer to it little by little, is the fact that the US dollar might be losing its control over the entire system as far as a reserve currency is concerned. After World War II, the US dollar became the reserve currency. That's right. You cannot, if you want to do business, you have to do it in dollars. But now with BRIC, we need Brazil, Russia, India, and China. They decided to create their own currency. Maybe we should be using that currency instead of using the dollar. And frankly, it is not such a bad thing, because don't forget, by us making the dollar the reserve currencies, I mean, we got to have lots of dollars. And automatically, it kind of ties in the idea that we need to keep raising debt to create more dollars, for there's more dollars. So ultimately, the seed of destruction was caused for us to have more and more and more and more debt, because frankly, everything is in dollars. So we need to have more dollars. Therefore, we need to generate more dollars. So it may not be a bad thing that we're not reserve currency anymore. But the point is, he's saying that he's very uncomfortable with this idea that maybe we might be losing that battle, and we might be more on the brick side, where the dollar doesn't become a reserve currency anymore. And that in itself could be an issue. Sorry. Go back. Let's see what he has to say.
More and more, whether central banks and individuals, okay, people want out of that system of a progressive loss of the role of the dollar in in the global transactions.
It's
Yes.
interesting. The dollar fear has been a very real one for many investors, but you've seen dollar kind of supremacy still reign.
It reigns transaction-wise, but people conduct nominally a transaction in dollars, but they don't store it in dollars. And that is what the problem is.
It's interesting. You mentioned oil for just a moment there. With all the geopolitical risk we're seeing, particularly in the Middle East, you've seen Brent rise above $80. And where do you think it goes from here?
No, it's small probability of a big,
The thing you have to realize, this kind of guy is not out there to tell you where oil is going to go or what price stock to buy. He's just giving you big picture ideas. He's basically saying, be careful of the debt, be careful of the dollar we're going to lose, right? Be careful of all these things. Giving you grander views on what he thinks is happening.
I would say geopolitical event, small probability, not very high, because should that event happen, oil would be way, way above 80, as you can expect. We'd have a worse than 1973 oil crisis, because we have a more fragile, more interactive systems than 1973. So, but I think it's just markets pricing in justifiably a small probability of that. People are aware of that possibility, but they're not putting too much trust in such a forecast.
So you mentioned gold for a minute here. How much are you willing to be buying gold at this moment too? And do you buy it as a kind of answer to your concerns about the dollar?
I'm not a gold buyer. I would say that I'm more of a my focus would be more on being hedged against a eventual market collapse, because
that's what he does, right? They're always asking, well, what do you think is going to happen next? Should you be buying gold? Should you be selling stocks? Should you be buying Bitcoin? And his views, and this is kind of what I'm trying to teach you a little bit, is that you need to hedge yourself, right? Of course, this is more complicated. I know. Buy gold. Well, yeah, buy gold or don't buy gold. That's easy, right? So it's a binary choice. But when it comes to hedging, what do you mean by hedging exactly? What am I hedging, right? Well, you're basically buying the protection for future decline. Well, what if there's no decline? Well, then you lost money. But that's ridiculous. No, it's not ridiculous. Don't you do that with your house? Don't you hedge the risk of a fire in your house by buying insurance? Why don't you do the same thing on the stock portfolio? Because it's more complicated. Right? The market doesn't make it easy for you to understand risk. How do you know what risk is about? I'm buying stock, buying options, but how much risk is involved in there? Well, I mean, I know if I'm making money, I'm losing money. Well, let's say you make money. I mean, last week, if you go into my Patreon channel, I think I averaged on one trade on GCT, I don't know, annualized was like 3,000%. 3,000% return. But how much risk did I take to that 3,000%. I wouldn't be able to even tell you. I mean, there's the Greeks, when you look at options, right? They kind of help you gauge the risk of the transaction, but it's very difficult. It's very difficult to understand exactly how much you're taking. And what he's basically telling you is, well, can you tell me, are you going to buy, is oil going up? Is gold going down? I mean, what do you do? He says, no. I'm hedging myself long term. I'm not here to predict the stock market. I'm here to say, you know what? We're going to have, and believe it or not, he's at Universa because I mean, he's not a portfolio manager anymore, but he's like a distinguished scientist or whatever, some kind of title they created for him. But he wrote a paper before COVID in 2020 saying, you know what, the probability of having some sort of event where we are stuck at home or where we're going to be having some issues with a pandemic of some sort, because he was out there, right? He was out there traveling in China, and he realized, oh my God, this could happen to us. And he's not a stupid man. It's not a stupid man. He realizes this could be a problem. And he was a trader, and he talked to the guys over at Universa, and they say, maybe we should hedge out this portfolio. And Universa is able to do that because they have, they tell the investors, listen, when you put your money in, you can't take it out. You got to trust us, right? We might be buying a bunch of protection, a bunch of puts on the S&P, and nothing might happen. We may have to pay millions of dollars, but when it hits, we'll make hundreds of millions of dollars. So you're going to have to trust us on that. So that's kind of where he's going with that discussion, which I think is quite interesting.
Because we're more fragile than we were, probably at any point in the last 20 years. So if not, 30 years. We're very fragile, and also you've got to realize that the big rally in the S&P 500 over the past 12 months is attributable to a very small number of firms linked. Now, AI is probably going to be the best investment, but maybe not.
Well, that's a little scary. Basically saying that, you know what, we're making money on the stock market, but you're not making money on the stock market. You made money on 7 stocks.
It's these firms. In other words, they may not be representative of the growth of AI. Because remember, when the internet started, everybody used Alta Vista. They were one of the pioneers, and then we switched to Google. Okay, so in other words, some existing firms have a huge capitalization, gains in trillions, owing to the promise of AI, and someone else may come in.
He's basically saying, watch out, because NVIDIA might not be all and might disappear after a while. That's an interesting point.
And take the business away from them.
Yeah, you've navigated some of the most significant market moments in history, Black Monday, 2008. Yes. How do you see this
navigating, meaning that he made a lot of money during that time by hedging?
Moment. You talked about fragility in the market today. The market has shrugged off almost everything this year.
What happened is like these crises happen when you expect them the least, which is why people don't have any protection. They're overexposed to the market, and I think it's very similar to the environment we had in previous collapses. And the market becomes complacent. People are used to it. They may have some kind of precaution in the beginning, but then they throw precaution to the wind, get more rally, and that's when vulnerability is going to be at its maximum.
What are the words that you would use at this juncture? Are we in a bubble? Is there still animal spirits jumping around? And what is causing it? What is causing the exuberance we're seeing in the market today?
I think that we are coming out of an environment of very low interest rates that taught people to avoid conservative investments and go into assets that can gain in value. So people are used to investing in the market, used to like investing in the market. And that was, I think, Mark Spitznagel's point, is that it's attracting more and more people.
as you mentioned, as you see, he's mentioning Spitznagel, which is his good friend over at Universa. And I guess the point that he's making is that, the market is doing well, so you're being complacent, so you want to stay in the market. So then the more you stay in the market, the more complacent, the more money you make. I will say one thing, though. I mean, I don't think so much I agree that, and again, he and I in the same way, we're not trying to predict whether we're going to have a crash, right? What you want to do is you want to protect against a crash. Let me give you an example, right? If you buy a bike, right, and you're riding the bike, and you're wearing a helmet, right? So, well, that's okay. I guess now I could have an accident because I have a helmet on. No. What you want to do is you want to prevent an accident, right? You want to prevent an accident as opposed to feeling comfortable that you have a helmet, therefore you could have an accident because you have a helmet on. Right? That's not such a good thing. So that's kind of the idea between risk management, that you don't the risk management doesn't really mean anything. If you're able to manage risk, then it's not risk anymore, it's something else, right? So it's that concept that we're addressing here. It's a concept that stop asking for someone to tell you what to do. Understand, educate yourself, understand what's happening. Don't forget to subscribe to my channel, like I said, and realize that you need to protect what you have, but not necessarily by always trying to predict what the market or what stocks are going to do, because you can't do that. Nobody knows. But what everybody can do is they could protect the books, and that's what he's doing. And if you protect it at the right time, you can make a boatload of money. Of course, that is for everyone.
And has more the reasons they got in, are okay. So nothing has changed. But all you need is just a small change in perspective. You see, to expose the fragility of it. We have valuations that are crazy, built on a lot of hope, and the economy is very confusing. You see, so on one you hear stories here and stories there. Okay, is it overheating here, or is it cooling off there?
Which is what I've been saying, right? We have a recession coming up. Why? Because it takes several quarters for rates to go up. Right? The economy is confusing technically. What do you mean? Well, I mean, on one end, we're saying that some of the numbers, unemployment numbers, are going down, so we should be good. But yet, some of the payless numbers recently showed that inflation is out of control, not in control anymore. But I thought it was under control, and technically, with such increase in rates, we should see a decrease in economic activity, which we're not seeing. But some people I've shown you in previous videos basically telling you, no. What you're seeing is not what's really happening. So we have a recession, you just don't know it. So that's why he's saying there's confusion everywhere. And he's right, there's confusion. And he's right, there's a change in all he needs is a change in, look what happened to the change in Tesla, which I got killed last week, right? Tesla, the robotaxi and blah, blah, blah. The guy comes out, he showed the car that drives itself without a wheel. Driving, I was like, wow, I mean, this is fantastic. And then he says, you know what? Well, what's the point of you having a car in your driveway 10 hours out of 24? It's a waste. Make use of it. Wow, it's a great idea. And I have now a bus for 10 people in there. Wow, it's amazing. And then the market took a crap on it, dumped on it. Stock went down like 10%. I don't know. It's because he's too close to Trump, or maybe people don't understand. Well, they basically say there was not enough information, right? But the point is that the mood changed right away. They've been expecting, and that's not what I want with Tesla. That could happen to the stock market. You could come up Monday morning and they say, you know what, this is not happening. Maybe what you should be buying is some June 2025 SPY puts, just in case you have a huge drop. We never know. We never know what's going to happen Monday morning. Although, frankly, I don't believe that the Fed wants a crash in the stock market, right? Nobody's going to be well served by it. You're right before an election. All they have to do then, you know what? You're not happy with it? You know what? I'm going to lower rates. And then that should fix it. Let's see what else to say here. I think always interesting stuff.
You see, so we don't have a classical environment for us to make judgments, which is why I would say that one has to be schizophrenic, extremely bullish, while believing in a total collapse. In other words, tail risk hedging. Okay, that's Mark's point. Although I think Mark, as you said, is less bullish than he was, or maybe he's even waiting for the first shoe to drop.
Well, how does this time compare to other times in history? Another thing Mark mentioned is that we're really vulnerable to black swan events. I thought that was an interesting comment because as long as I've known you, you've been very reticent to call out black swan events.
No, but we have a fragile system. Okay, we have more interdependence, and it was shown during COVID, between world economies. We have more globalization, almost, at its peak. So more dependence between economies.
The thing we all link together, which is not a good thing. If somebody doesn't well, like Europe right now is not doing great, that could impact us as well.
So in other words, if something collapses, it causes feedback loops. We have more debt in the Western world relative to, particularly debt relative.
And that's another problem just for us. Everyone is over indebted.
Than we can handle. And what's bad here is that, and it's sad that, as you get richer quickly, you start having more debt, but your incentive to grow isn't there anymore. So we are now probably the richest we've ever been, and we've never had more debt. And it makes no sense because we have to grow out of this.
To that end of debt market, do you think that the U.S. is going to be able to continue to issue in the way that it has? Will there be foreigners to buy U.S. debt?
Oops, that's what I've been saying. As long as they're willing to pay our debt, that's okay. What happened when they want to stop? Let's see what he says.
Exactly why I'm afraid. I'm afraid of what the current administration has done in 2022 when they confiscated assets. It doesn't encourage people to invest in new currency because the first geopolitical problem, and you may be, if you're, let's say that you're a citizen of countries that are, in the Middle East or in Asia or even in Eastern Europe, you don't want to be you don't want your money taken away from you. You see, once you do it once, you can do it once. It's not the kind of thing that you can do twice. So that is harming the dollar and harming the United States enormously. And I think President Trump mentioned that. He said we shouldn't be freezing assets.
Okay. Well, okay. Now he brings Trump in the conversation. I mean, that makes things a bit more complicated, right? Because I guess his point is that, you're confiscating assets. So that's not good for the US dollar. Then because people won't buy in the dollar because you say, hey, listen, if you don't like what my country does or what I do, you take my... I say, no, we're not going to do that unless you're Putin or Putin's friend and Putin's friend's friend or friend. And the idea... you could always say that, well, didn't you know that by getting so close to Putin in Ukraine, that you would cause him to do something, and therefore you pushed him in doing something so you could confiscate, take the money of these people? Don't forget, 3 to 4 dimensional chess is being played in the market. Anyway, so what is the conclusion? For you, what do you need to learn and understand from a video like that? What you need to understand is that there are many risks in the system. That's one. The debt, the dollar, geopolitical risk. We have really a market that is up based on really 7 stocks. We have overvaluation. That's one thing. Second, you cannot predict what's going to happen. He didn't say sell your stocks tomorrow. What he's saying is that you should hedge your portfolio. You need to understand what that is. You need to understand what it is to hedge your portfolio. And whenever he speaks, I would listen to him because he was right in 2008. He was right in 2020. And don't forget, we usually have a crash every 8 to 15 years. Now, what could happen as well? You could buy yourself a bunch of puts, right? Hold on. Market goes down. I think I did that last week when the market was down a lot. You unwind your puts, make some money, and then you let the market to go up and up and up and up and up. Don't forget, the higher the market goes up, the cheaper it is to hedge the market. Buy it, hold it, see what happens. It drops, you sell it. If you're lucky, at some point, maybe buy long dated puts, right, so that you don't get stuck with the short. If nothing happens to the market, then the thing could disappear and it's not worth nothing. So I don't think it behooves you to buy short dated puts. Buy long dated puts. That's what he's saying. Long dated puts, right? We're talking not 2 weeks, 3 weeks. We're talking about 6 months. Talking about a year from now. You could even buy 2 years from now. Now, of course, something big has to happen for you to make money. But if something big does happen, you will make money. And we're not talking 1%. We're talking 5, 10, 20%. There's big bucks in there. That's what they did. Remember, Universal made 4,000% out of COVID. Why? Did they know COVID was coming? No, they didn't predict, but they said we got to hedge the book. And right now, you got lots of stuff that are potting up everywhere, and you don't know when they're going to hit. But as a matter of fact, you should protect your investment. That is always something you need to do. And based on that, don't forget to subscribe to my channel. Don't forget also to subscribe to my Patreon channel. So each time I put a trade on, I will tell you what's going on, and you could see the progression. You could see what's really happening, because it's always very helpful so that you have some confidence, right? Yeah, let me show you. Okay, here we go. I got the trade. I got the trade right here. Look. So this is September, right? Right, as you could see, we're green mostly. And then if I look at October, right, we're green also, not too bad. 550, 645, 200, 840, 110 per day. I'm not talking $10,000 a day here. But for you to do that, you need to understand exactly, because don't forget, as I'm telling you, I'm teaching myself as well here. Right? I mean, I don't know how these things trade all the time. I'm learning on NVIDIA. I'm learning GCT, SPY, ACMR. I understand how these stocks are trading. For example, if I'm looking at ACMR at 21, that thing should be around 27, right? But it's been down a while, so we're waiting for it. GCT should be around 27. It's at 25. SPY, NVIDIA 134. That's expensive. So you need to understand. You need to learn. You need to educate yourself. There's not if you want to make the real money. If you want to be entertained, fine. Now listen to make $1 million with NVIDIA. Otherwise, you need to learn. You need to understand, and you need to take that to the bank. And I will see you Monday with some more information.